Well, there is an eerie pall over the stock market this morning as we wait for the Fed minutes, which I think will be a nothing burger, and while we wait for NVIDIA, which could be a something burger. Did I just make that up? Anyway, let's start with the Tesla news, of course. This from AJ this morning. He goes by ALOJOH on X. Just in, Tesla sold 13,561 vehicles in April across all of Europe. This is at only 2.3% or 327 vehicles behind 2023, despite complete removal of all the BEV purchase incentives in Germany and adverse incentive charges in various other significant European BEV markets. Hence, this is objectively a strong result for Tesla, he says. Well, here's some more details from Barron's. The electric vehicle maker, Tesla, sold 11,254 cars in the European Union last month. They say this was up 3%. I'm not sure why there's a difference between what AJ is saying and what they are saying. However, overall, Tesla doesn't report regional volume or monthly volume, leaving investors to look for industry data. The EU April figures an improvement through March. Tesla delivered about 66,000 vehicles, down about 5% year over year. Growth has been a struggle for Tesla so far this year. The company delivered about 387,000 cars in the first quarter, down 9% from a year ago. Now, that was the overall number. Things haven't turned around completely for Tesla, including the UK and the Nordic countries. Tesla sales dropped about 2% year over year in April. Slight improvement, though, because they had been down 9% in those territories. It was a better month for Tesla. Battery electric vehicles shipments generally. April BEV shipments grew about 15% year over year, faster than the 6% growth for plug-in hybrid vehicles in Europe. Coming into March, PHEV shipments were up about 11% year over year compared to just 4% for BEVs. It says that Tesla, things are getting a bit better for Tesla, but Wall Street remains cautious. Analysts project global 452,000 deliveries in the second quarter. That would be down from 466 in 2023 and be the second consecutive year-over-year quarterly decline. On Tesla's first quarter earnings conference call, CEO Elon Musk said he expects Tesla will deliver more cars in 2024 than the 1.8 million vehicles it sold in 2023. That will require faster growth in the second half of the year, and Wall Street currently projects about 979,000 cars shipped in the third and fourth quarters, up from 920,000. All right, so where am I right now on this business? I haven't been doing much car counting or much car expectation shouting recently. All I can tell you is I have not looked at the second quarter yet to see the exact or projected numbers. I haven't looked at Troy's numbers since I left on vacation, I don't think. So I will be looking at those things. But overall, I expect Tesla to be roughly flat in the total China numbers. I expect European numbers to be slightly up. I expect United States numbers to be slightly up. And I expect another 75,000 vehicles from Cybertruck, giving a total increase of at least 150,000 for the year over last year. But if Elon would hire a sales and marketing team, a top-notch, a very outstanding, even better than me. Anyway, I think he should hire a top sales and marketing organization, or a top leader, a vice president of sales and marketing, to go out and do some proactive work in that area. For instance, let's look at this as an example. So your merit reporting. Bargersville fleet of 13 police cars saves taxpayers about $80,000 a year in fuel costs compared to gas-powered police vehicles. They bought 13 Teslas. The town is saving enough on fuel to pay for 2 additional officers. I'm very worried about that. $80,000 in savings, and it's paying for 2 additional police officers. That'd be $40,000 a year each, $20 an hour for police officers. That doesn't sound good. We've just traded our first car in this year, and we got $17,500 for a year 2019 Tesla, compared to the $5,000 we get for our gas-powered police vehicles. So yes, this would be an example of what I'm talking about. If there was a top-notch sales and marketing team at Tesla, they would be out pushing police departments all over the country. It is insanity to me. I've said this so many times before. It is insanity to me that we have pretty much every major city in the United States and in Europe and around the world. Almost every major city is run by the liberal side of the aisle. The liberals are the most likely to think that there's a threat from global warming or whatever you want to call it. And yet, they're still driving these police departments and the highway patrols and everything. They're still driving ICE cars. How can that be? How can the cars that are being driven by the executives of all these cities and all of the United States, et cetera, how can they still be driving ICE cars? How can some of the U.S. Postal Service cars still be ICE cars? It makes no sense to me. If we believe that global warming is a thing, shouldn't the cities and the federal government and the states be the first ones to be switching over? Anyway, Elon, I'm probably not available. I'm probably too old, but there's got to be somebody like 5 times better than me out there that could run this sales department. Anyway, it's from James Catt this morning. He goes by the handle Tesla Fan Metal. He says China is doing better, Europe not so much. He's expecting a big end of quarter discounts to pop up any day now. Daily reporting countries are down 17%. Well, this was before the numbers came out this morning. James Catt is definitely the number one right now at being able to estimate production and ship. Well, no, actually, Brian White's number one on production, but James Catt has been number one on shipments. But James is going to have to change his numbers after this morning. But that doesn't mean we won't see incentives in the month of June. Trevor Scott, who goes under the handle space_Taz, says, while reviewing the Hyundai Ioniq 5, Doug DeMuro, now listen to this, states that fake shifting makes electric driving better. In fact, he states it makes it better than any other EV. Help me in the comments. Please help me in the comments. Look, I am a speed fanatic. I have been buying powerful cars my entire life. I love the feeling of and I kind of like the noise, all that. I'm part of that crew. But to put in fake shifting, fake noises, I can't figure it out. I am completely befuddled. I want to hear your comments. Please let me know if you think that you want on your electric vehicle fake noises. I kind of like the speed without the noise. It's kind of cool. All right, from the Kobesi letter this morning, Target stock falls 8% after weaker than expected earnings with a 3% revenue decline due to consumer weakness. Target CEO says the decline reflects continued soft trends in discretionary categories. The company's store traffic fell by 1.9% less per quarter, and the average amount spent by customers also fell by 1.9. So the average ticket spent by customers walking through the door fell 1.9. So that doesn't have anything to do with the ongoing number of folks that have stopped shopping at Target over the protests from last year's sad decisions with regard to what they were carrying on their shelves to placate the gay community. The company's store traffic fell by 1.9%, could be partially related to that, but not the fact that the average ticket was down 1.9. Consumers bought fewer everyday items like groceries, along with fewer discretionary goods. This is another sign that consumers are struggling. What have I been saying? I'm telling you this is okay. I'm telling you, you know what? I'm not there yet. I'm still at 30%. Third quarter is recessionary. Now remember, we won't know that until October, days away from the election. So this is unlikely to impact the election very much. Most of the country thinks that we're having a very bad economic situation anyway. Why? Because they're paying so much more for gasoline and for food products and for food away from home especially. and because their income isn't keeping up with it. But the fact that they think it's in recession could be exacerbated if there is a literal statement of the GDP falling below, actually going into negative territory. This just breaking from CNBC. Sales of previously owned homes fell 1.9% in April compared to March to 4.14 million units. On a seasonally adjusted annualized basis, according to the National Association of Realtors, the forecast had been for a slight gain. Now, I will tell you once again, I know I always talk about the bicycle industry, but it's my frame of reference, and I only tell you these things when I think they apply to the larger market. Sometimes, well, in fact, every single time in my career where there were massive sales of bicycles in January, February, and March out of season, unexpectedly high sales in those months. Why? Because of really great weather or because of something going on in the economy. Then you're going to pay for it in April, May, June. Well, over this winter, we had amazing sales of existing homes and amazing sales of new homes, way over expectations. And so you're going to pay for that later in the year because folks who were planning to buy this year have already bought. That's at least part of what I believe is going on here. I don't think this is more evidence of recession in housing. I think this is just an evidence of a shift in the annual, how people are spending in terms of seasonality. These sales are based on closings, so contracts likely signed in February and March. Mortgage rates jumped at the start of February and then held around 7% for the next 2 months before moving even higher in April. Of course, mortgage rates now are down under 7% again. When we see these mortgage rates, which is a 300 basis point increase from pre-COVID pace, we're in new territory as how the lock-in effect will affect home sales, as Lawrence Yun, chief economist for the realtors. I guess Lawrence is about 40. He's never been through higher interest rates. So no, I continue to believe that higher interest rates are impacting, but not to any great degree. Total housing inventory at the end of April was 1.21 million units, up 9% month to month and up 16% from a year before, but still a 3.5 month supply at the current sales pace. A 6-month supply is considered a balance. The supply of homes priced over 1 million, however, was up 40% year over year, which is why that segment of the market is most active. Sales of homes priced below 100,000. Sales of homes priced below 100,000. Are there homes selling for under 100,000? You telling me then that my young friends can't afford a house below 100,000? I didn't know. Where are there homes below 100,000? Okay. Fell 7.1% year over year, while sales of those priced over 1 million jumped 40%. This based, according to the article, based on the inventory. You have to have you have to have product in the basket. You have to have product on the shelf in order for people to be able to buy it. And so this is the statement that there was plenty of homes over 1 million. Well, plenty. More inventory on sales, more inventory on product available over 1 million, not so much under 100,000, which I'm kind of joking about the under 100,000, but I guarantee you there's none in California unless it's someplace in Death Valley. Tight, and maybe even not even there. Tight supply kept prices under pressure. The median price of an existing home sold in April was $407,000, an increase of 5.7% year over year. No, inflation is dead. It's all over. We don't have to worry about inflation anymore. This is another record high for April with multiple offers due to strong demand. 27% of homes sold above list price. That is the number you should concentrate on. 27% selling above list price. And by the way, inventories are extremely low compared to historical numbers. Now, they've been low for they've been at historically low numbers for about 7 years. Remember, I know real estate next to bicycles. I probably know real estate next best because so many of my clients over the last 16 years were in real estate. I've written 2 books on how to buy and how to sell a home. Those were not under my name, so don't go looking for them under my brand. Those were ghostwritten. Business Insider says, here's probably the most pessimistic view on the economy that I've seen so far, but I think it's worth talking about. The economy will suffer a prolonged downturn this year or next. The billionaire investor, I'm so sorry, Gunlatch, you've heard of him. This is what he was saying, told Fox Business on Tuesday. He's quite concerned. Data released in the past months showing the majority of economic sectors are declining and others growing more slowly. The Double Line Capital founder and CEO also underlined the pain caused by inflation, which soared to over 9% in 22, remains above the 2% target, and interest rates, which are above 5%. Consumers have faced a double whammy of higher prices for basics such as food, gas, and housing, while also owing more interest each month on their car loans, credit cards, mortgages, and other debts. All of these things are up tremendously. The things you have to buy, Gunlatch said, citing car insurance and homeowners insurance as an example. Now, these are out of these are smart people. Do they not read anything beyond the headlines? Car insurance and homeowners insurance are up because of one-time situations, and they will settle down again, just like all insurance has settled down over the years. There was a time when I absolutely could not. There was not a company in the world, there was not an insurance company in the world that would give me product liability insurance because of I think it was that McDonald's hot coffee in the lap situation. And then a month later, there was all kinds of, 2 months later, there was lots of people willing to provide that insurance again. These things come and go. The car insurance and the homeowners insurance will settle out over the next 6 months or so. Persistently higher rates will drive some companies to ruin and tank the wider economy, he predicted. I think the higher for longer is going to lead to a recession. You're not going to take out Tesla, he mentions, necessarily. They might have other problems, but it's not going to be because of interest rates. What you take out is the people, the small businesses, the medium businesses, as they will run out of cash borrowing at 10% instead of 4%. And he also fails to recognize that the small businesses, month after month after month, the small businesses, which would include companies up to 500 people, those small businesses are saying they don't need credit. They just don't need it. 2% of them are saying that they're having a hard time finding it. So no, this is not where it's going to happen. Now, the small businesses may go out of business, but it won't be because of tight credit. It will be because of nobody walking in the door. Gunlatch did note that softening economic data has raised the possibility of 2 Fed rate cuts this year, but he doesn't expect it to stave off disaster. Absolutely not. If the Feds raise rates in September or November or December, that impact's not going to be felt until February, March of next year. It's worth emphasizing that the veteran fund manager has been ringing the recession alarm for more than 2 years. Well, he was ringing the recession alarm last year when every single person except me was ringing the recession alarm. They were all wrong. This year, now they're all saying that there's no recession. Oh, no, everything's wonderful. And now I'm saying there's a 35% chance we will see a recession in the third quarter. I tend to look at when everybody's on one side of the issue, there's something wrong. They're missing something. And right now, I think they're missing the consumer running out of money. He predicted last fall the downturn would occur in the first half of this year, which seems unlikely at this point. Well, there's a possibility that we would have a negative second quarter. Yes, yet Gunlatch is one of several experts who sees cracks forming in the economy. CNBC has this morning with regard to the Fed and other stuff. A series of Fed officials on Tuesday urged patience when it comes to rate cuts as inflation remains above their target. Fed Governor Christopher Waller on Tuesday said he would need to see more data. The economy now seems to be evolving closer to what the committees expected, he said, but in the absence of significant weakening, in the absence, I want you to hear this again, in the absence of a significant weakening in the labor market, I need to see several more months of good inflation data before I would be comfortable supporting an easing. Fellow Fed officials echoed this statement, with Boston Fed President Susan Collins, another hawk, saying patience really matters right now. Atlantic Fed President Raphael Bostic saying he was not in a hurry to cut rates. On Wednesday, further Fed officials are set to give remarks, and then the minutes come out later today from the last meeting. Existing home sales data we know that, we just read it. Okay, there was an interesting kind of convergence of opinion about the Fed in a number of headlines this morning, a number of publications this morning, all based on these recent Fed talks. here were the kind of the mood: confused, unclear, on defense, uncertain, risk management mode. Well, the Fed minutes will be out later today. NVIDIA out later today with their earnings. The market is sideways again, like it was yesterday, thus far. Tesla has been living in a space of its own yesterday and today, with their hot numbers from yesterday being trimmed, at least so far. The last time I checked, we'll look at a minute, but it was off its lows for the day. Let's find out what is actually happening right now. So here we go. We have got Tesla. As of now, we have Tesla down 571. So no, it is now below its lows of the day and heading lower. So back down to 180 and 89 cents. We have got the Dow and the NASDAQ and the S&P all pretty much sideways. Dow up 7, NASDAQ up 6, and the S&P down 0.22. We have got the Magnificent Seven completely mixed, completely mixed. Meta up 6.4, NVIDIA down 8.59. We have got the Cathie Wood's actually all up this morning. Cathie Wood stocks have been doing absolutely the opposite of what you're expecting, because interest rates, last time I checked, were climbing this morning. And yesterday when they were down, Cathie Wood stocks were down. I'm sorry. Yes, when interest rates were going down, Cathie Woods were down when they should have been up. Now they're going up, and things are a little confused right now. I think everybody's kind of waiting to get this NVIDIA thing behind them. And then there's no real big news the rest of this week. The Target news is not good, but doesn't seem to be impacting the market that much this morning. Okay, let's go ahead and take a look at where bonds are. We have got bonds. So yes, we have the 10-year up 1.2 basis points. We've got the 2-year up 2.5 basis points. So that inversion continues to expand. It's at 43 basis points now. Can anybody help me on this? What is going on with these inversions? You got the 2-month is only up 0.2 of a basis point. That is now under 100 basis points again, but not by much. Again, I don't know what I don't know what to say. Let's look at the oil. Oil is down another buck this morning, $77.58. Brent is getting close. Well, it's still at about 82. Natural gas is up 0.64% at 2,688. 2,688. I still have not had a chance to check what's going on with natural gas. I'm so sorry. Gold slipping $30 this morning, dropping back under 2,400 at 23.95. Silver down 2% this morning. Copper down 4% this morning, dropping back under $5 at $4.86, $4.87. We've got the dollar up this morning, but really flat. And then you've got Bitcoin dropping back under 70,000 at 69,699. Okay. Anyway, and then we'll go back one more time and check what's happening with Tesla. Still around, picking up a little bit, down $5.44 right now. All right. So later this morning, what do you think we got? Who knows? Yesterday we changed things up. Why? Because we had breaking news. So we got Brian Wong on yesterday to talk about what was happening with the what do you call it? The semi-truck. Great show yesterday. If you didn't see that, you want to check it out. I will put the card up here. Not 100% sure what I'm going to do this morning. There's a part 2 to Brian Wong. There's also a part 2 to Brian White. So I don't know which way to go on that one. And so one of those two will be up later this morning. I'll decide in a little bit. And then, of course, tonight, we got Jeff Lutz coming in. That can't be I can't wait to get Jeff Lutz back on the show, because there's so much that he and I need to talk about in terms of directionality for everything, for the market, directionality for the overall economy, directionality for Tesla. And that's what we do on this show, is we take all of that. We're the only ones really that dig deep into the economy, deep into the direction of the market, deep into the fundamentals of Tesla, and deep into the stock analysis of Tesla. Do you know anybody else that does all of those four like we do it on this channel? If you like that, then hit the like button, hit the notify button so you get notified of all these upcoming shows. And then, of course, subscribe. And then, did I say that already? No, join Patreon. Help produce the show. I really could use a bunch more Patreon help. Could you afford the $3? Maybe $5 and get a free book? $10, get 2 free books? Or maybe get a Cybertruck bottle opener at the $10 level down below, hit the button, move over to Patreon. It would really be helpful if you could dig in. I know inflation is probably affecting you too, but dig in, come up with $3 a month. It would be a big, big help. Okay, that's all I got. It's been great talking to you.